Is the housing market crashing? That's what everybody wants to know. In today's video, I'm going to go over some raw data, and it's pretty cool. If you're a numbers geek, there's unlimited data that you can pull from huge data sources like Zillow. So I'm going to go in there and show you how to do it. If you just want to spend a whole day geeking out looking at data from 2000 back to 1996 to present, not only looking at that and looking at what home prices have done in different areas, but also looking at their forecast. Stay tuned. I'll get into it. All right, Matt, the Mortgage Guy, residential mortgage broker, licensed in 47 states. Go to greatmortgagebroker.com to connect me and my team. In today's video, I'm going to nerd out a little bit. I'm going to dig into some graphs. If you're a data person, this might be for you. For most people, I'm going to give you the advice up front. You don't necessarily want to dig into data when you don't know what you're looking at, because it probably causes more confusion than it does clarity. And like most things, people who are using the data can spin it to kind of fit their narrative. I've got no narrative today other than to say, look at what this data says about home prices in different areas. And you can look up your specific zip code stuff. So let's jump into it. It, in my opinion, is pretty cool stuff to look at. So let me move. What do we got here? We got a bunch of different graphs. I'm going to move them. All right, let's take a look-see-loo. First and foremost, this is Zillow.com/research/data. I'll put the link down in the description. You can go here. It's all public data. And if you know what you're doing, you can find all kinds of different stuff. There's two different things that I'm going to look at on today's video. First, home values. And Zillow has their own home value index. That's the ZHVI, Zillow Home Value Index. And then I'm going to look at Zillow home value forecasts, which forecast is looking forward. What are things going to do in the next month, in the next quarter, and in the next year? And I think that's a pretty cool one to look at. So we'll look at that for sure in different US metros. So first and foremost, there's the home values. And this stuff has data back 20 plus years for you to look at. So when you download these, because you pick which data you want and then you download it, it's going to come across in an Excel file, and it's a lot. It's a lot of data. I'm warning you now, right? So they've got seasonally adjusted stuff. They've got raw stuff. They've got where you can pull what they call top tier, 65th to 95th percentile range for a given region, and then bottom tier. It kind of explains it here on the site, what top tier is, what bottom tier is. And then you can pull it by 1 bedroom, 2 bedroom, 3 bedroom, 4 bedroom, and what those prices did over this time period, and either pick the metro and US, which shows you like the major metros, or you can go by state, by county, by city, and narrow it down more. But just for this example, let's pull one for single family homes. And let's choose metro. You can go by zip code. And I'll show you what I did when I went by zip code and I found my zip code to look at what prices had done back there. Let's just actually do that. Let's pull this graph that I've already pulled. That way, we're not wasting time poking around. This one right here, I pulled it, and it's a lot. Like I told you, it's a lot of data, a bazillion columns, right? I had to do Control F to find 95826, the zip code I wanted to find. And that's on line 1831. And like I said, this data goes back, box J is January of 2000. So 23 years. And all the way to March of 2023. So if you're curious, like I was, and you want to pull this one that shows all this data and then find the zip code you're in, you're just going to have to use Control F to find what row you're in. Again, I'm 1831, and I'll show you real quick stuff that was interesting to me, and then I'll let you play with it all you want. So line 1831 actually highlighted March of 2023, 450, 744. And then you go back to March of 22, 455, 445. So you're seeing about a 1% decline in this zip code based on their metrics, right? Depending on whose metrics you're using, it might be a year-over-year number of down 1.5%, down 2%, but whatever the case, it's down. If you go back another year, it was at 405. So 405 to 455, what's that, about 12%? So up 12% from which would have been March of 21 to March of 22 in this specific zip code. Remember, real estate is local and it's not going to be the same everywhere. I'll go back one more year to 2020, 357, 425. Let me do real quick. 357, 425. Guesstimates in my head going to 390 would be 10%. So maybe it's 14%-ish times 1.14 gives me 407. Yeah, so between 13 and 14% from 20 to 21 in this specific zip code. So run these, take a look at what you find, and do with it what you will. It's raw data. It's Zillow, Redfin, these big behemoth companies have access to all the data. They consolidate it here for people that want to be data nerds and go through it. So real quick, I want to show the home values forecast because I think everybody wants to know what do these big companies with all this data project going forward. Let me see if I can find it. I think I have it here. And I pulled it for all, the US major metros. And here's what we got. You can go through and pull this yourself. You can look at, New York, Los Angeles, Chicago. I'm in Sacramento. So let's go down to number 26, Sacramento. It looks like in Sacramento, the first column, there's 3 columns: month, quarter, and year. So projecting, again, this is projected going forward, 0.1% home price increase over the next month. But then we've got a negative number, negative 0.2 over the next quarter. So if we're going up 0.1 over the next month, they expect the couple months after that to see a slight decrease in price. And then over the next year, negative 2% on home prices. So that's a negative, right? I mean, it's not a crash. It's not a 30%, but it's a negative. And you can just scroll down here. It looks like Kansas City. There's a positive number. How wild is it that they show a 2.4% increase over the next quarter, but then 1.4 over the year? That's seasonality for you, right? Big increase over the summer months, but then over the year, the numbers less. 2.5%. Where's that? Indianapolis, Nashville, 1.9%. I'm looking at the yearly numbers. Virginia Beach, Virginia, going down. I'm trying to find like the biggest numbers. 2.9% is Memphis, Tennessee. They're seeing growth there. Tucson, Arizona, 3.1%. Notice we don't have any 15, 20% home price appreciation, right? Those days are gone. Thank God. It looks like flat, to me. Everything is falling between -3 and 3% appreciation, which to me is flat. Oh, there we got a Knoxville, Tennessee, 4.2% they're seeing over the next year. See if we can find one any higher than that. Spokane, Washington, that's 3.5%. There's a big negative, down 5.2%. Lafayette, Louisiana. If you're in Lafayette, could be some rough waters ahead. That might be the biggest number I'm seeing. I'm scrolling through here in real time, seeing if I can find something higher than a 5. Coeur d'Alene, Idaho, 4.8% uptick. All right. I thought Idaho was done growing. I thought they were on the decline, but here we are. Somewhere in Pennsylvania, East Strauss, wherever the heck that is. Oh, wow, it's a long name. East Stroudsburg. All right. So have at it. Oh, there's another Louisiana down 5.7. What's going on in Louisiana? Tell me in the comments. Tell me what you find. Tell me if you've got other things you search on here. Man, I'm seeing all these -5s, and they're all Louisiana. What the heck's going on in Louisiana? Something must be going on. People moving out of there. They don't like Louisiana. Anyhow, this is just a quick glimpse into some of the data. Truth be told, if you're buying a home that you're going to occupy for the next 5, 7, 10 plus years, you probably don't need to be looking at this. I was talking to a home buyer recently, and I said, listen, if you're buying a house and you continue to look at rates every single day and prices every single day, it's the equivalent of you buying a stock and looking at it every 10 minutes. It's probably not good for your mental health. It's probably not good for you, right? If it's a long-term play, then keep it a long-term play. And tell yourself you'll look at it once a month or once a quarter, but don't look at it every single day, every 10 minutes. Oh my gosh, has my home value gone up $100? Has it gone down? Probably not the way to do it. So anyhow, hopefully this was helpful. Thanks for watching. Again, greatmortgagebroker.com is how you connect with me and my team. If you want to connect with a realtor anywhere across the U.S., go to homeandmoney.com/Matt. If you want to connect with a real estate agent in California, especially Northern California, I've got a lot of people I can refer to that are great, that'll help you out. So just reach out to us, team@mtmg.com. Thanks for watching. Go check out some other videos on the channel. There's probably some